Tyler, I have a confession. It's not really a confession, you know it, but it's something I don't know that I've really ever fully admitted. But Verizon and AT&T, they've been terrible investments. They really have been terrible investments. But in the past, I have fallen for the siren's call of these being safe, stable, reliable, high yield dividend stocks to buy. Tyler, I see you raising your hand. You too have fallen for this in the past as well.
If you haven't, I he who hasn't cast the first stone.
Play. Thank you. Thank you for your kindness there. So here's the reality. We know they've made some changes. They're trying to get their house in order, cut dividends. Stocks have continued to fall. We're going to talk about a couple of ideas we have. We have an actual ultra safe dividend stock to buy, and Tyler has a high risk, high reward stock he wants to talk about. Before we get into those two stocks, though, this video is sponsored by The Motley Fool. If you're looking for more great stock ideas, go to our special link. Go to fool.com/the smattering. Motley Fool is going to give you its 10 best stocks to buy right now. Okay, Tyler, I'm going to let you kick things off. You've got a high risk stock here that you want to talk about. Maybe not high risk, but the dividend yield's super high. And that's usually the market telegraphing. You're not so sure this company's dividend is going to be safe. What's the stock and what's the story?
Let's get weird here, because that's why you bring me on, is to bring on obscure companies that nobody's ever heard of. This is called One Liberty Properties. One Liberty Properties is a real estate investment trust that it used to be a little bit more diversified, and that's the intriguing story behind what we have here. This was a company that not too long ago was pretty heavy into retail, pretty heavy into, it had a couple office buildings. It didn't, you could call it a diversified REIT, not too dissimilar from something like the one that you're going to mention. But what they have done over the past couple of years is, if you looked at every press release they put out, anything that had the word sell in it or disposition, they were selling an office or they were selling a retail. And every acquisition that you saw was industrial. So this is a company that went from having like just tons of varied assets to now they're like a 65, 66% of their entire portfolio is industrial real estate, right? And that has been one of the better places to be in real estate as of late. If you look at a lot of other industrial real estate, that's been arguably some of the best performing real estate companies over the past decade relative to other REITs in the business. And so what I think we have here is an underappreciated turnaround story of a business that has now disposed a lot of the assets that it wanted to get rid of. It's become more focused as an industrial real estate company.
I want to pull up a screen share here because I think this is important. And you might see this and be like, oh, okay. So you mean after the pandemic happened and e-commerce has grown and there's been this massive shift towards e-commerce away from physical retail, remote work is killing the office. Oh, so they're doing that now. Yeah. And 2019, notice these dates are 2019. These dates are 2018.
Yeah, they've been doing it for a long time.
That's the key. This isn't a company that's reacting after the fact to the market. This is a company that's been progressively acting on a plan that they've had in place for 5 or more years at this point.
Now, I can wholly understand why people might get a little scared of this one. Number one, its dividend basically hasn't changed in 5-10 years. It's been basically paying a flat dividend for a really long time because it hasn't been growing. It's been shuffling assets around, selling things, buying things. They wanted to restructure this portfolio. And leverage has been a little bit on the high side. I think those two things would make people a little bit nervous. But the thing that has given me that little extra, I'm okay with making this bet, is that it has a lot of insider ownership. It's the Gould family. They were one of the founders of the business, and they still own upwards of 20%. I think somewhere close to 22% of shares outstanding are still owned by the original Gould family. And so when you have that much ownership, you have representation on the board, you're much less likely to see a company that's going to be like making these hard strategic moves for the point of actually like building an empire, but more along the lines of growing the asset value and kind of the long-term sustainability of the business. And I think with that is that little extra thing that puts it over the top for me, as if I want income, I want a high yield. This might be one of the higher yield that looks risky, but something I'm willing to bet on for that income in an interest rate environment that we have today.
I'm going to pull up a screen share here, and this goes back to the beginning of 2018. You can see that purple line unchanged. That's its dividend. It has not raised or lowered its dividend over that period of time, but the stock has been hella volatile, I think is the technical term we can use, and is 14% below where it was back at the beginning of 2018. And as a result, the dividend yield has whipsawed. It has whipsawed a lot. And if we look at it on an actual percentage basis, it's above, because some quirkiness with our chart system here. I believe it's above a 9% yield at recent prices. But the key is it's a higher yield than you're going to get with Verizon and AT&T, both of which have had to slash their dividend, and their stocks have fallen a lot more than that. So you're seeing this as a perception risk reward opportunity, investing along with the founders of this business that still have a large stake. And that should anchor them to being the business, to being more focused on what's in the long-term best interest of the business. I like that. I like that. Some investors watching this are maybe watching it because they thought Verizon and AT&T maybe sounded safe, and now they're like, eh. And now we've got Weirdo Tyler giving us some obscure, still maybe seems maybe a little bit not secure business. Rest assured, I've got one that I'm pretty comfortable saying that this dividend is about as safe as any you're going to find, and that's Realty Income. Ticker is O. They brand themselves. Yeah, Tyler yawning. A lot of people will be yawning at Tyler, but it's boring is amazing when you're talking about getting paid every single month. They brand themselves as the monthly dividend company. They pay that monthly dividend. They've increased their dividend every year since they paid their first dividend. They're 26 years, I think, at this point, over 25 years. And the yield is about 6.5%. So it's not as attractive. Is that right? No, 5.5%. The yield is about 5.5%. So it's not as attractive as what you may get from some of the other companies. So it's maybe not as attractive as what you might see with Verizon or AT&T right now. But you know what? You're also going to get a dividend that you can count on and that is likely to continue growing every single year, probably multiple increases a year because of that monthly payout. It's a really strong business. What's the core of their business? They own single tenants, retail businesses, properties, and their tenants, who's who in retail, restauranting, experiential retail, mostly e-commerce resistant customers. They have a little bit of exposure to some things that maybe aren't great. Pharmacy businesses, interesting right now, might be a little bit weak. Movie theaters industry, we know that's a little bit weak right now. But again, even those are single digit percentages of their book. So where it has some weakness is a tiny bit of exposure, massive diversification, and their partners, their tenants, come to them to buy properties from them and then release them back because they don't want to own properties. It is a very strong business model. They've made some big acquisitions recently that I think are going to continue to deliver returns. They have a business model that's shown that they are good buyers. I think you put all of those things together, and I think Realty Income passes the sniff test of safety, reliable dividend, and some ability to grow that dividend going forward. So you got a couple stocks to pick from there. Tyler, with his oddball pick, One Liberty Properties. Again, a little more risk reward on that one with that 9% plus yield. Tyler thinks the dividend's probably safe. And I've got one that I know the dividend is safe. Lower yield, closer to 6% with Realty Income. But either way, you're looking at some nice options if you want to get a good dividend and you want to stay away from AT&T or Verizon.